You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 11th day of June, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast, that's our live training room. That is reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, you can do so by going to mytradingiq.com. At the top of the page, there's a link. It says 5-day free trial, no credit card required. Just click the link, fill out the registration form completely, correctly, because it's an automated process. You want to make sure we actually get it. And then typically same day, we'll get your desktop set up, get your indicators indicating, and then your 5-day trial will start the following day. Now, doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial. You will get 5 consecutive trading days, even if it stretches over a weekend, which in most cases it will. So that turns 5 days into 7 days, because some markets do trade on Saturday and Sunday. So when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for the afternoon broadcast, this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's a couple different ways to join this afternoon broadcast live. Best way, you only have to do it once. Go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, complete the 30-second registration form, and you're done. Going forward, what will happen, every trading day, you'll get an email about an hour before this broadcast starts. At 12 noon Eastern, all you have to do is open that email, click the link, and it will automatically log you into our platform. Now, the benefit of doing it that way is it gives you access to the question box so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from your desktop, but you still want to join live. And there'll be days when you're busy and you can't join live, but you want to get caught up later. You can do both via our YouTube channel. It's very easy to remember. youtube.com/CFRN. You already have the YouTube part memorized, so all you got to remember is CFRN. Not only do we broadcast live, as we're doing right now on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit. Go to another day, watch a little bit, fast forward a little bit, watch some more. You'll discover the thread of connectivity, the thread of continuity woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. Okay, we'll open with our daily devotional and a word of prayer as we do each day. Then we'll get into the markets, and then about 12:45, 12:50, Michael will join us, give us a recap of what happened in the live training room this morning. Then we'll go live on TradingView for a half hour, do some live trading. Then I'll wrap things up with our good word for the day. Now, the topic of the devotion we're in last week and this week, simply called passion. Today's scripture is Psalm 27, verses 13 and 14. I'm going to share it from the Message translation. I'm sure now I'll see God's goodness in the exuberant earth. Stay with God. Take heart. Don't quit. I'll say it again. Stay with God. Psalm 27, 13 through 14. Nobody likes to wait. One quick look around at the reactions to lines at the DMV or the grocery store reveals just how impatient we can become. How many times have you sighed in frustration because a customer is counting out their change to a cashier, coin by coin? Do they not know how much is left on your to-do list? Ever had a slow internet day raise your ire? What about difficult scenarios when we're waiting to hear back on job applications from a potential love interest or on a medical diagnosis? When we were young, some of us were taught that when we pray to God, He usually gives one of three answers: yes, no, or wait. Waiting is the answer we least want to receive because in our hyper-rushed, instant gratification world, it doesn't feel like a real answer. Instead, it feels like we're being ignored. It is little wonder why we often end up trying to create our own solutions to our problems when it seems like God is not answering our prayers. Are we missing something in our impatience? Are we missing out on a process bigger than the immediacy of the moment that we're in? In Psalm 27, David shows us that there is a more effective way to pray in all situations. Prayer is not a monologue, but rather a dialogue that requires us to wait and listen for a reply. Even then, we are called to do more with our prayer time than sit and listen. Psalm 27:14 says, "Wait for the Lord, be strong and take heart, and wait for the Lord." The kind of waiting described in this verse is active. Our requests aren't just randomly lifted up to be stamped, approved, or denied, but are instead a part of the questions we ask in the process of living by the Spirit. The key phrases like be strong and take heart remind us that waiting still involves action on our part, and that this waiting is not without purpose. In the times when we are waiting for an answer, we can still find beauty and purpose within the process. As the song says, we are able to praise Him in the midst of the uncertainty, finding strength and courage even as we face our fear of the unknown. Join me in a word of prayer. Heavenly Father, we come before you with hearts full of gratitude for your promises and your steadfast love. Lord, we thank you for the assurance of your goodness and faithfulness. Help us to remain confident in your promises, even when we face trials and uncertainties. Strengthen our hearts to wait patiently for you, knowing that your timing is perfect. And give us the courage to be strong and take heart as we trust in your plans for our lives. May we see your goodness manifest in every area of our lives and continue to seek your presence daily. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Tuesday. Well, there's some huge political news out there, but I'm not going to go into it. You know what it is. So I'm sure everybody has their own opinion about it. So we'll just get it right into the numbers. We'll start with the indices, or the cash markets here in the U.S. Currently, the Dow is down 242 points. The NASDAQ is up 3.5. S&P 500 is down 15. The Russell 2000, our man in the street, is down 17, almost 1%. In the commodity basket, crude oil up 41 cents, trading 78.15 last. Gold up $1.30, trading 23.28 last. Silver down 65 cents, trading 29.21 last. That's a drop of almost 2.25%. In the Asian markets at the close, the Nikkei posted a gain of 96 points. Shanghai fell 23. The Hang Seng dropped 190, which is just over 1%. And in the European markets at the close, FTSE down 80, 1%. The CAC down 122. I'm sorry, the DAX down 122. The CAC down 104, which is almost 1.5%. So that gave us a mixed day in Asia. It was a red day for the UK. And it's a mixed Radio Tuesday here in the US of A. We got the Dow, the S&P, and the Russell all in the red. The NQ is positive by only 7 points. And if you trade the NQ, well, you know that 7 points is, now, I'm not talking about ticks, okay? Like in the live training room, the goal for the NQ on a trade is 30 ticks. Okay? I'm talking about points. Each point has 4 ticks. Each tick is worth $5. So 1 point is worth $20. So a 10-point move is worth $200. So the NQ is now up 8 points. We like to see all of the major indices the same color. As futures traders, we don't care if they're all red or all green, because we can trade in either direction at the drop of a hat if that's what the market tells us to do. But when all four are the same color, and they could be very soon here because now the NASDAQ is up only 5, when all four are the same color, red or green, that's when you get better follow through and your trades just seem to flow smoother. So, but yep, now we're down to unchanged on the NQ, so looks like that baby's going to go red. Now, those of you watching futures charts, you may already be seeing it in the red. Just popped back up, now it's positive 5 points. Okay, there's a difference between the cash index, which you can't trade, and what you can trade, like futures and options. Those are derivatives of the index itself. I'm sure most of you already know that, but I'll just share it with you. Okay, news. I know some of you closely follow NVIDIA, and they just did a stock split. NVIDIA began trading Monday on a new 10-for-1 split basis. Now, for those who don't know what a stock split is, and I'm sure most of you do, often what a company will do is when their price of one share of their stock gets high, and different people have different definitions of high. Is it 500? Is it 800? Is it 1,000? Is it 10,000? It's up to the board to decide. So if you owned one share of NVIDIA on Friday, when the market's closed, when the market's open Monday, you owned 10 shares. They did a 10-for-1 split. Now, an example in Microsoft. Microsoft has split so many times, I can't even remember. That's why Microsoft, it's such a behemoth company, you think, wow, it'd have a huge stock price. Well, it would if they had never split the stock. Why did they split the stock? Well, to bring the price down per share so that more people will get involved. Now, because there are brokers that provide fractional share ownership, it's not as popular a thing as it once was, but it's still there. The ones you want to be worried about is when you see a reverse stock split. That means if on Friday you owned 10 shares, and on Monday you own 1 share. That's a reverse stock split. That's bad. That's a company in trouble. But NVIDIA, they closed Friday at $1,208.88 per share. And they opened for trading yesterday morning at $120.88. And as a result, the stock closed up nearly 1% in its first day following the split. Split means that owners of NVIDIA common stock held as of the close of market on Thursday received 10 shares for each 1 share they held. For example, if a shareholder owned 4 shares of NVIDIA as of Thursday, they now own 40 shares post-split. But again, the price per share went from $1,200 to $120. Stock splits make owning shares of a stock more affordable by lowering the price of individual shares without diluting the value of existing shareholders' total holdings. So it's not like issuing additional shares. It's the same shares, they're just slicing and dicing it a little bit different. According to Yahoo Finance, the stock split is going to make NVIDIA a lot more reachable for a lot of these retail traders. Now you rarely see a stock over $1,000 with a 50% implied volatility. So the prices of the options are extraordinarily high. So option traders are really looking forward to the split. NVIDIA's split comes after the company's total market valuation briefly eclipsed $3 trillion on Wednesday, pushing the chip firm past Apple to become the second most valuable publicly traded U.S. company. Shares of NVIDIA have skyrocketed thanks to the explosion of interest in generative AI that kicked off when OpenAI debuted its ChatGPT software in late 2022. Since then, hyperscalers like Amazon, Google, and Microsoft have been battling to get their hands on NVIDIA's hardware to power their own generative AI platforms. I wonder who will split their stock next. Yes, you're correct, Apple. Apple's stock surged more than 5% today to reach an intraday record as investors digested the announcement of its AI platform, Apple Intelligence. After the stock fell on Monday during and after the company's worldwide developers conference, the stock moved higher as some Wall Street analysts cheered the company's announcements. If you look at the signal away from the noise, you realize that this is an unprecedented capability that Apple is going to introduce, and it's going to integrate AI into everyday life. Now you got to ask yourself, do you want AI on your phone? Elon Musk is talking about getting rid of all Apple products. His employees will no longer be able to use Macs at their desk or iPhones to make business phone calls. At this point, it's I don't know if you want to call it a threat, but it's what he's considering. He made that public. On Monday, yesterday, at the developers conference, Apple announced Apple Intelligence, its long-awaited foray into the generative AI space. The company said the platform would be integrated across the company's hardware and software products, ranging from the iPhone and Mac to mail, messages, and photos. Apple Intelligence will be available for the iPhone 15 Pro and iPads and Macs running Apple's M1 series chips and newer later this fall. So if you want to get your hands on this, of course, you got to go buy a new phone. That's part of the plan. Key features of this launch include updates to Siri, which will now be able to, for instance, parse phones for addresses sent in messages or find photos in a phone's photo library based on voice prompts. Think about that. Tell your phone, hey, find that picture of Marianne's wedding. It just pops up. Now, with good, there's always some bad, but we'll see. I'm still running an iPhone 7, and it works just fine. Little crack on the screen, but as long as it continues to work, I'll continue to use it. Oh, I did see the other day that Microsoft is going to stop supporting Windows 10 here in the near future. I don't remember the exact date. Now, the computer I'm running is pretty souped up, but I've checked and it won't run Microsoft 11. So I've either got to get a new computer or replace whatever component in this current computer. I mean, I have several, but the one that I'm using right now to do this broadcast. So I'll worry about it when the time comes. Okay. Banks sell off. A slide in banks weighed on stocks ahead of the Federal Reserve decision, with political uncertainties in Europe driving traders to the safest corners of the market such as treasuries and the dollar. Equities dropped from all-time highs, and the KBW Bank Index sank 2%, with big names like JP Morgan Chase and Citigroup getting hit. Nvidia Corp led losses in semiconductor firms on news the U.S. is weighing more limits on China's access to chips needed for artificial intelligence. Apple climbed to a record in the wake of the company's annual Worldwide Developers Conference, where it showcased a number of features related to AI. A sense of caution prevailed as investors braced for amplified swings at a time when volatility has been relatively subdued. So all eyes definitely on the Fed tomorrow. Meta. An uptick in the number of companies enacting stock splits this year. Looking at who could be next, with some analysts pointing to Meta platforms. Meta is the only stock in the so-called Magnificent Seven that hasn't ever split their shares. Now, Google became Meta. Okay, just so everybody knows. And though the stock is off all-time highs hit in April, it's up more than 450% from 2022. Trading at more than $500 a share, Meta is ripe for a split. The stock has benefited from appetite for AI exposure, buybacks, and the introduction of a dividend in the past year. Meta shares slipped as much as 0.7% in early trading today. So there's the news. Let's take a look at Logic 247. It's our 24/7 around the clock E-mini alert service. Now, it's not just E-minis. It's also crude, gold, silver, euro bonds. Sorry, I got a throat thing going on. We're in week 306 since we launched Logic 247. This morning I published alert number 16,900. Over 306 weeks, we've published 16,900 alerts. And what we've averaged is 20% or less getting stopped out on a weekly basis based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, Valerie did the recap this morning at 7:30 a.m. Eastern. She'll update it this afternoon. I've added some alerts this morning, and so she'll compute everything and post the current recap this afternoon and then possibly again this evening. But at the time she did the recap this morning, we had issued 26 alerts since the market opened Sunday night. One never triggered, still waiting on 5. That gives us 20 actionable alerts, of which 2 were stopped out. So that puts us at 10% for the week. Yesterday we were at 17%. Now we're down to 10%. Now the logic alerts, they have, and I'll just show you. I think it's been a while since I walked you through this. So now, 2 weeks ago we had 0% stop out. Last week we had 7%. And this week it's just Tuesday, sitting at 10%. But the big news, I guess, is crude already hit its highest weekly trading zone going into the close yesterday. True story. That's a big deal in our world. Okay. I scrolled way too far. Here we go. All right, let's do this. Okay, last week we ended up with 7%. We had a total of 56 alerts issued, 10 never triggered, 46 actionable, 3 stopped out, 7%. Then Sunday night began week 306. 306. First alert out of the gate was a short. S means sell. B means buy. T means initial target. And you got a second target, and you got a third target, and then the final trade to target on a short is always the weekly trading zone below. Thumbs up means it did its job. At the time Valerie did the recap, price had dropped to 53.38 and a quarter. So it hit the initial target, second target, and it almost hit the third target. Now it may have gone on to do more, but that's just what this means when she's doing the recap, which she probably did Sunday night or Monday, whenever it happened. Okay, the second alert for the week. First we had short on the ES, then a short on the Dow, short on the Russell, short on the NQ, this gold. I must have duplicated, and so that's just negated. We had a stop out on the euro. We had a short on the euro, and we had a short on bonds. That was all Sunday night. Then we roll into Monday. We had a short on the Dow, had a long on the Russell. B is buy, T is initial target. On a long, the final target is always the weekly zone above. On a short, final target is always the weekly zone below. Long on the NQ, still waiting, still waiting. A long on gold, still waiting. Stop out on the euro. Long on the NQ, short on the NQ, long on the Dow, short on the Dow, long on the Russell, short on the Russell, long on crude, short on silver, still waiting, still waiting, still waiting, still waiting, still waiting. These are all the ones I did today. So she hasn't had a chance to review those as of yet. So now you know what a logic alert looks like if you've never seen them before. Got your entry price, your initial target, which is designed to help you get your goal for the day. And then by looking left, like on a short, I look for previous swing lows to show you where you should find potential support. That's what PS stands for. PR means potential resistance. That's on a long trade, on a long alert. These alerts come out well ahead of them triggering. Okay, I like to give everybody at least 15 to 30 minutes minimum to get the alert. Go look at the 30-minute chart, draw in all the lines the way I teach you, and then watch it happen. You don't have to stumble over your feet to get to the computer to try to place a trade. In fact, the purpose of these alerts is not for you to trade so you don't have to learn how to trade. The alerts are designed to help you learn how to trade. By giving you these ahead of them actually triggering, you're able to go to your 30-minute chart and you're able to draw a horizontal line at the entry price, at the initial target, which is good for your goal for the day. And then you'll draw a line here and you'll look left and you'll go, oh, I see why I did that. And then you'll draw a horizontal line at this price and you'll look left and you'll go, oh, I see why I did that. And then bang, you're at the zone. Okay. All right. I hope you guys will do that. If you do, It'll make learning how to trade simpler. Trading is not easy, but it can be simple. Now, 305 weeks is a very long time, but longer than that, way back, probably around 2010, I'm guessing. The CTAs, they're different. The logic alerts can come out around the clock, 24/7, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Their day session is our night session and vice versa. But the Globex session opens each evening at 6 p.m. Eastern. I try to get these CTA targets out as quickly after the open as I can. So last night, I managed to get them out 10 minutes after the market opened. The first thing you should do is go to the 30-minute chart of markets you actually trade. Make a note where price is at the time the release came out. Then draw a line in the sand at the long target, line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. Price gets below the 30-minute BBC, it's attempting to reach the short target. The BBC is the green line you'll see on all my charts. Stands for bull bear cross. When price crosses above the green line, we're bullish and anticipate higher prices. When price crosses below the green line, then we're bearish and anticipate lower prices. Always relative to whatever time frame you're looking at. Could be daily, weekly, monthly, 5-minute tick, range. But I create all the alerts on the 30-minute chart. There's nothing magic about a 30-minute chart. But you gotta pick. You gotta pick time frame and stay with it, okay? So that you learn the characteristics of that time frame and how price flows in that time frame. 30-minute is like my roadmap. It tells me when I should trade or when I should not trade. And when it tells me I should trade, I then drop down to my smaller time frame range chart to actually execute the trade. Now with the CTAs, now remember with the logic alerts, I'm giving you the entry price, the initial target, additional targets, and the final trade to target. With the CTAs, now this is where you step up your game and you start looking left to spot potential obstacles or targets, whichever one you want to call it. You're looking for previous swing highs or swing lows, just like I do with the logic alerts. And you're learning how price behaves at a weekly trading zone. That's very important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night until they close Friday afternoon, price is above the 30-minute BBC. It's trying to get to the zone overhead. Price is below the 30-minute BBC. It's trying to get to the zone below. We've published the zone since December 14th, 2009, almost 15 years. They come out Monday morning at 6:15 a.m. Eastern. And once they're published, they're carved in stone for the entire week. As I said, crude went on a rampage yesterday and hit the highest weekly zone on Monday. Now, does that mean I'm going to recalculate the zones? No, they're carved in stone. In fact, what that means is we expect crude by Friday to be substantially lower, possibly at the other end of the spectrum, closer to the lowest weekly zone. Have there ever been weeks where price closed above the highest zone or below the lowest zone? Yes. Over almost 15 years, there have been a handful, maybe 2 handfuls of weeks where in fact that happened in one of the markets on any given week. But for the most part, the week opens and closes inside the zones. Just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal today. So let us go and take a look at the daily. Why the daily, you ask? Well, institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? Because of their account size. The size they trade in literally moves price. So by looking at the daily chart before you begin your trading session, you're often able to determine what the deep pockets are doing. Just 2 minutes with whatever you trade. It doesn't have to be the S&P. It could be any futures market, any individual stock, crypto, Forex, ETF. See what's shaping up on the daily. Now you'll notice we came down when we opened and we found support at blue and climbing. Talked about that yesterday. Now, price ran up. Actually, we opened here. We ran all the way down to the support. Now we've pulled up to resistance at the step line. This green line is the BBC. You can see the pullback holes more often than not. But eventually, we know it will trade through and start creating legs in the opposite direction. That's on whatever time frame you're on. See, when we traded back through here, the leg, retracement, price always reverts to the mean. In our case, the mean is green, and it's called the BBC, bull bear cross. Bullish above it, bearish below it. And the new all-time historic high is 53.8550. Yesterday we got up to 53.7575, and today's high is 53.74. So you see that wick that came right down? This was a red candle all the way down until it hit blue and climbing. That's CFMA1 is the technical term. I just refer to it as blue and climbing, red and falling. One is bullish, the other bearish. This makes it simple for me. Okay. If you train yourself to spend 2 minutes with the daily chart of whatever you trade, you'll see over time that your results will change. Now, this is the 30-minute chart. Tuesday, this vertical line separates us from Monday. Then back here is last week. Here's the opening candle last night on the ES. 10 minutes into the life of that candle, CTA targets were published. Now, had blue and climbing directly overhead, that's resistance because it's probably on its way. On the way up, it's your friend, but when it gets directly above price, then it can become resistance. Resistance will always send the market looking for support. Remember, the pullback holds more often than not. So we consolidated for hours at the BBC, and then we popped up, and I thought we could pop up to this high right there, but we were only able to pop up to that high. See it? Right there. That is yesterday, that high is now today's high. So this is Friday, okay? Now on Friday we had different zones, but here's my point. You had a high, a lower high, and now you have a lower high. That's a definition of a downtrend. So price got below the BBC, got below the weekly zone, and found support at yesterday's bullish cross. When you have a bullish cross, that's where the blue line gets above the green line. First time price revisits that area will almost always be good support. Same is true of a bearish cross. Okay. Yesterday when price was trying to climb, it spiked this bearish cross, but it held it in check for a few hours. Okay. And then finally we overcame it. That's important information. Learn to watch for that. Okay. So we came down through, we spiked yesterday's low, but we didn't make it all the way to Friday's low. Buyers came in here, support, pushed us up to the BBC and the zone, that's resistance times 2. So we dropped again to the short target. So there was opportunity to get your goal on the long side, plenty of opportunity on the short side. And right now, price is trapped between blue and climbing support and the BBC resistance. Remember, the pullback holds more often than not, even when it spikes it like that. As long as it's still touching the BBC, that's a hold. Okay? But as you can see, the pullback holds more often than not. Whether you're pulling from below, pulling down from above. On the Dow, here's where we opened last night. Dropped to the weekly zone, consolidated for hours. Only 3 things happen at a zone. 70% of the time will be this, consolidation. 20% of the time, rejection, like that. 10% of the time, the slice. So, again, today's high was just shy of yesterday's high. So going back to Friday, we got a high, a lower high, and now a lower high. That's a sign of weakness, a downtrend. So we get a leg down to the target. Pull up to the BBC, not quite, we didn't quite make it there. And then we dropped in one candle from zone to zone. Now, when price drops to a zone, we expect support. When price rallies up to a zone, we expect resistance. Resistance. Support. Support bounced us. This zone support bounced us to this zone resistance. Now, yesterday, this zone was support. But today, it became resistance. And now, where are we headed? Back to that zone at 38,570. On the Russell, here's where we opened last night. Pretty similar picture. Down to the BBC, consolidation, finally overcame red and falling. It turned to blue and climbing. Got above the zone. This candle here. Opened at 2034 and ran up to 2037. That's 3 points. You need 2 points to get your goal for the day. Then, why did price stop where it did today? Because it couldn't take out that little wick right there. See that yesterday? So if you're in this trade, you should be expecting potential resistance here, here, and if it had gone farther, here, here, okay? But we went south, down to the target, bullish cross, okay? Consolidated at that bullish cross for hours, reached down, touched the zone, then we finally traded through the zone, and today's low took out yesterday's low by just a little bit. And how do we feel about just a little bit? We're always very suspicious. So Based off yesterday's low, we bounced back up to the BBC, which we expect to be resistance until proven otherwise. But red and falling has turned to blue and climbing, and that's potential support. So price is trapped. And Michael has arrived, so we'll pick up with the NQ. He's going to give us a recap of what happened in the live training room. Then we'll go live on TradingView for 30 minutes. And then I'll come back, finish the recap, and wrap it up with our good word for the day.
All right.
Looks good.
Here we go. Great. Here we go. All right. Good afternoon, everyone. Today is Tuesday, right? Yeah, the 11th day. The 11th day of June, 2024. Now, if you have not taken a free trial with us and you want to, go here to my Trading IQ, and right here it says sign up for your free 5-day training now, 9:15 to 11:30. If you click on that, you'll be brought to this registration page right here. On this page, all that we ask for is your name, your email, your phone number. Fill out these little things, little one-click drop-downs. If you have NinjaTrader, give us your machine ID, not your Ninja ID. Give us your machine ID. They're located in the same place, but the machine ID is like the 5th line down, I think. Copy and paste that machine ID into here, and if you have TradingView, give us your login ID, not your email address, your login ID, all right? Give us all that information, we'll get your indicators indicating and get you going, all right? All right. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 11th day of June, 2024. This morning, this is odd that we've had 3 days, 3 out of 7 days so far. We were negative on the NQ this month. With the NQ usually being our big winner, it's not right now. The YM is. And the ES is close third. But anyway, we're -8 on the NQ. We're break even on the Russell. We were +30 on the YM and +12 on the ES. That put us at +260 in the morning session. Today it took 22 minutes and 6 trades to get to the goal for the day. At that point, we're up $2,700, and we took a total of 16 trades this morning. So on the month now, we're up $2,322 over 7 business days, averaging $331 per contract per 2-hour business day. On the year, we're at $42,812. That's over 109 business days, averaging $392 per contract per morning session. Okay, so that said, if you were to quit trading, following the 24/20 blueprint, which means you trade over 24 months, you get up to 20 contracts. Now, that is a lot to trade with the markets that we trade. The ES is okay, but the other market's pretty thin. When you start getting up to 18, 19, 20 contracts, you get a lot of slippage. But that said, if you started with 1 contract or 13 like I did this year, and did everything just like I did in the room this morning, you'd only had to work 38.7 hours getting your goals so far this year, right? And if you did that and you added 1 contract a month, so far this year you'd be averaging $1,279 if you started with 1 contract. And if you started with 1 contract last year, like I did, and you're up to 18 contracts now, you'd be averaging $6,162. Those are hourly rates, $1,279 per hour, which is awesome, or $6,162 per hour, which is, well, better, about 5 times as good. All right, let's get into the trades. Now, we did trade a little bit on everything, though the ES, I think we only had 1 trade, and it was a nice one, but I think we only had 1. We had some pretty good movement today. It was nice, nice movement. It was big picture. It was kind of, well, it was questionable what was going to happen, but I can get into that in a little bit, maybe, if I don't run out of time. On the YM, our first trade right here, we ended up with a break even. That went just enough to get us to the break even. This would have stopped us out if we'd have stayed in it. It would have stopped us out there and then made the move down. We did get some profit on the second one down. We got 5 ticks on that one. We had a break even there, and we didn't trade it again for a little while. Being about 20 minutes. Right here, we picked up 3 more ticks on this move right here. That was off the ribbon right there. Okay, it wasn't the black arrow. It was off the ribbon right there. Then I didn't trade it again until all the way over here. And on that one, we had a good trade. We picked up 20 ticks on that. 20 ticks on that one to get us to 28. And then we had one more small trade somewhere along the way here. We had a break even there. And, well, I don't see it, but we had one more trade that was 2 ticks. I don't know where it was exactly, but we had one more 2-tick trade to get us up to 30. And that was the YM. That was the YM. Now, during the break, I had one purple arrow right here. And that was it for the YM. Right? I didn't realize until just now that the YM is our big winner of the month so far. And we're actually, we're almost halfway through the month with the YM being the big winner. That is unusual. The NQ is usually the big winner almost every month. All right, so on the Russell, we started out here with 10 ticks profit on this one, right here off the ribbon. That, yeah, we didn't come out of the overbought here, so that was not going to have an arrow on it right there. It was straight off the ribbon. Then we had a break even there and a stop out on this one. So that puts right back down to 0, and we stopped out on that. Now during the break, there was a long opportunity right there, and actually this wasn't during the break, this was during the morning session. Okay, there was a nice blue arrow there that I didn't get, the green arrow there that I didn't get. And going sideways here, there was a green arrow here that would have been enough to get you to break even, probably, if you had a good fill. Then you wouldn't have done anything else in that direction. Had a green arrow going the other way that gave some profit. This one right here, if you took this, was a stop out to the tick. Stop out to the tick. And this one right here, this blue arrow right now, it's happening, would also be a stop out. That wouldn't be more than to the tick though. All right. And the ES, here's our one trade on ES right here. We picked up 12 ticks on that trade. During the lesson plan, we had one more blue arrow right in here that I did not do, and that would have stopped you out had you taken it. Okay. We going sideways here, we had nothing during the break. Nothing at all that could be done there during the break. Okay. On the NQ, we started all the way over here, right on the NQ. Our first trade on the NQ was right in here. We had a shorting opportunity right there. And we took a break even on that one. The next trade on the NQ was right here. We picked up 12 ticks on that one. And then we didn't do anything for a little while. We had a break even on that one, and we stopped out on that. That put us at -8. So I think we had some more break evens here on the NQ. But you see there were a bunch of green arrows in here, all of which were good green arrows. Blue arrow there that was good. Green arrow, this one would have stopped out to the tick, maybe. It might have been a great trade if you, for me, I would have had slippage and it would probably stop me out to the tick, but it did end up moving up nicely. There's some more break even trades in here, one there and one there. And then you get into the break. During the break, this blue arrow here, trying to see where those green arrows are coming from. They're a blue arrow trigger along. But this blue arrow here was, I think, the only, yeah, those green arrows are coming from this blue arrow along right here. Oh, it's a different blue arrow. This blue arrow along over here is giving all those 5 green, those target lines. But there was a nice blue arrow short over here during the break, a nice blue arrow long right there during the break, a series of blue arrows here that would have been all one trade for a nice long during the break. And that was the NQ today. I got -8. I had a lot of break-even trades. Well, out of all the trades that I had, only 2 of them actually did something. One was +12 and one was -20. Okay, and that's what it looked like for me this morning. Let's see, here and here and here. All right, so now I'm gonna put on the, hang on a second. Let me slide this over here. And I want to put the YouTube on. I don't have my YouTube running right now. I can see anything coming over there as well. Oops, let me spell it right. Here it is right here. And we'll jump into the YouTube stream right now. Okay, so anybody that's watching on YouTube, if you have any questions, you want to see any other symbols, all you have to do is type them in. All right, any other questions or any other symbols, just type it in. I'm watching over there right now too. All right, so our latest opportunity was right here, and it just barely put in a higher swing here on the YM. And a long trade right there that just barely put in a higher swing. Over here on the NQ, it's something to get here. It's going to give a down close. If it does give you anything here, it's going to be a green arrow short, but it didn't do that either. All right, I was thinking it might be a green arrow short there, but it didn't give that. All right, let me minimize this so I can see my DOMs a little bit here, and also see any questions that are being asked in here. I think this is how you see it. All right, so I am sliding that over, and I'm looking over here right now, and looking over here right now. All right, the NQ, it did give it the green arrow that I was mentioning here. It gave it right here after it pulled away from the black line in there a little bit. Now it's got to put in a lower swing, which it is about to do right here, it looks like. It's about to put in that lower swing for us. And something just happened. Oh, there was an auction right now. I think there was a bond auction or something like that was happening right here. I noticed because prices just bounced a little bit here on the ES. You don't really see it that much here on this time frame, but on a smaller time frame, there you go. You gap up. That's what I was talking about. The prices just bounced a little bit. And so here it is. Let's see. On the NQ, we want this to pull back down or bounce off the ribbon. On the Russell, we want that to pull back down or bounce off the ribbon. We're just going sideways here on the ES, and on the YM, we're getting out of the no trade zone right now. So we have gaps here on all these markets that we're going to want to see get filled. All right. And they probably will get filled right away. I suspect we'll see some filling of these gaps right now. Let's see this. Now, linking that right up there. It's going to happen. So the ES is at a point where it's trying to get out of the no trade zone here. It's going to advance quite a bit here to get out of the no trade zone. Hopefully it will successfully get out of this no trade zone to the upside here, is what I'm thinking we're going to get. But it didn't happen yet. Over here on the YM, we now have the outer bands are spread, so we have to pull back down and test the ribbon. Yeah, that's what we're looking for right now. Opportunity. I don't have my question box out. Let me bring out the question box and see if there are any. Now, those of you guys that are watching in the go to webinar, you don't usually ask many questions in here. It's people that are watching in the YouTube that tend to ask questions in this session. But if anybody's got any questions, you want to see anything else, just let me know. All right, I'd be happy to look at anything with you. So far, we did finally get out of the no trade zone here on the ES. It did move up like I thought it was going to move up, and now we just need to see a pullback. Gives a pullback for an entry. Let's go over here really quick and look at what's going on with. Oh wow, the Bitcoin took a bath today. That one really tanked. All right, well that is not a bad thing overall. I mean, it's probably good for the structure of the market, and it's going to end up stringing things out longer. I've been saying I think it's going to go sideways for like a month, is what I've been saying, but we'll see.
And there are companies like MetaPlanet, a Japanese public company, that are taking advantage of the dip. And they, how much did they buy? They bought today 23,351 Bitcoin.
Wow, that's a lot of Bitcoin.
Yep.
All right, and I jumped on the black arrow. Right here. Go ahead.
I was going to say the state of Wisconsin their like state pension plan.
Mhm.
They just bought a bunch of Bitcoin too.
Did they really?
Yep. Yep.
Well, there's some forward
Now
thinking.
they're nervous because
because of the drop.
But the weekends always get shaken out.
You gotta look at the big picture, the long term, and that's what those pension plans are. I mean, they're not looking at next week.
Right. Like some big name, I forget who it was. Oh, here, I'll talk about that later. I'll let you continue doing what you're doing because you're only here for a limited time. So
Yeah. All right. So we got the low over here on the YM. We're bouncing off the ribbon there. We had a blue arrow here I didn't see till just now on the NQ. We are bouncing off the ribbon right here, 657 up to 665 is what you're looking at on the YM. I'll bring that over so you can watch it develop if it comes together. See, the low on that is 57. You add 8 ticks to that, it's going to be up here at 65. Right, so that's what we're looking for on the YM. The NQ, if I had taken that, it would have stopped me out, the blue arrow. Now it's got a green arrow following it up. That's what the alert was down here saying, hey, pay attention, you got a green arrow. I'm going to slide this over here to the side and actually click on it like that. This is a black arrow here that I didn't take on the Russell. It should actually. All right, we triggered in on the YM. We're coming off the BBC right there after 4 ticks in profit. We want to bump the stop to break even. All right, our stop should be 10 ticks away. We had 1 tick of slip in there. That's why my stop was not in the right place. Over here, this needs to put in a higher swing. Looks like it's going to stop us out on the YM. On the NQ, it needs to put in a higher swing for us to trade in that direction again from that blue arrow. We did stop out on the YM. Unfortunately, we did stop out on the YM, but it happens. Come over here and record button on that again. Hello again, some stuff jumping around in here. And because we stopped out on this, we can't take another trade in that direction until we get a higher swing. Okay, until we get a higher swing. Now the ES is about to give us a long trade going right into the weekly trading zone. So, I mean, you can take it because it's got enough room to get the stop to break even, but just barely between the entry and the zone. Now, that's a questionable trade right there. If you want to take it, it's got some good numbers up above. It's also got good numbers down below. So I'm looking at the DOM when I say that. Yeah, I'm just going to take it here. The numbers I'm looking at up above are right there. The numbers I'm looking at down below are right here, right at our stop. So I know it's going into a weekly trading zone, but I think we have a little momentum on the upside. We filled all those gaps that we were just talking about a minute ago. We actually didn't fill it here on the ES. ES still has to fill that gap. But I think the zone is going to suck it back up there. And if it does, then we'll have 4 ticks in profit and we'll bump our stop to break even. We're just about there a second ago. Okay, 1 more tick and go to break even, and then we have no risk on the trade. Okay, it's almost there. It's coming. Oh, so close. All right, see the numbers up here that are jumping around. It's going to be attracted to those numbers here in a minute. I suspect. We'll see, though. We'll see as we move through these couple of minutes here. Our stop is in the right place. It should be 10 ticks away, and it is 10 ticks away. That's good. Everything else seems to be running the way that it should. Like the YM is the gap to fill is down here at 628 on the YM. Oops, I just lost my DOM. Go find it back. It's my ES DOM right here. Pin that on top. The gap to fill on the Russell is all the way down here at 2018. Here we go. The ES should push up right now. There it goes. You see that number right up there? I'm going to extend that because we're going to get there. There it is, 625. Stop to break even. And so the whole reading the DOM thing, that's in Thursday's lesson plan. Those of you guys that were in there in the morning session, it's in Thursday's lesson plan. Okay. I'm gonna lock in 4 ticks on this, bump that up a little bit more. And so the 4 ticks here is the equivalent of the stop out that I had over here on the YM. Okay. Just so you see it all down here at the bottom, we're still maintaining pretty much on the upside here. 5 ticks. Get up there. 6 ticks. 8 ticks. And I like it up here now. Are you guys seeing that stuff? Are you seeing it? Those of you guys who know what you're looking for. There's 10 ticks. All right. So it should get up to 64.50, but we just got 10 ticks out of that. All right. Now I'll draw a line for you at 64.50. 64.50. That's where it's going right there. And so Ronnie, what's your question later? I don't think you're in here right now. Anyway, no, he's not. All right, so that was all good positive movement right there, but we went right up into the zone, right up into that weekly trading zone. From here, I don't know where we're going to go. We should put in a much higher swing here. It'd be good if it breaks up above that. This is the number right here that I was reading in the DOM. 64.50 actually was the number in the DOM that I was reading. So hopefully we'll get up to that 64.50 number here, but the weekly trading zone could hold us back. The NQ, we want this. It just pulled back. The NQ, we want this to pull back and test the ribbon here. Pull back and test the ribbon. And on the YM, we need to put in a higher swing here on the YM to be able to trade in that direction again. Again, we haven't filled those gaps, and with futures, it usually fills the gaps right away. So the gap fill here on the YM is down there. Okay, and the gap fill here on the Russell is right there. And the gap fill here on the ES is right there. And the gap fill on the NQ is actually all the way down here. Okay, so that's what's likely to happen here in the next few minutes, I would think. Probably by the bottom of the hour, we'll see those gaps get filled. Now, we don't have trades developing on the upside right now. Nothing we can do here with this because we're going into a zone. Nothing we want to do here with this. Nothing we can do with this because it didn't put in a higher swing. And this one doesn't really have a higher swing. It doesn't have a trade yet either. Right now, if it gave you an up close right here on the Russell, it'd be a blue arrow right now. Gave you an up close that pulled out of the oversold, it'd be a blue arrow. It'd be a valid trade off the ribbon if you wanted to take it. If you took this one back here, it put in a 1 tick higher swing. So for me right now, everything's looking pretty weak. Looking pretty weak to me right now. But we'll see how it pans out. Hang on, I had minimized what I was looking at there. I don't think there's any questions over there in the YouTube, right? No questions for me. There's one fellow who was asking questions earlier this week or yesterday when I kept having issues with my data, my connection. All right.
Huge news day tomorrow, guys. Starting
Yeah.
out with the CPI at 8:30 a.m. Eastern, then crude inventories at 10:30, and then that announcement at 2 p.m. Eastern, and then the press conference at 2:30 p.m. Eastern.
Yes, big stuff tomorrow.
The consensus, of course, is that we will not get a rate cut this time, but maybe next time. So everybody will be hyper-focused on what Jerome Powell says in his prepared statement and also his answers to questions from the audience. So it's going to get pretty volatile. I would recommend being flat.
Yes, what happens here at 1400 is likely to be undone by what happens here at 1430.
Oh, and
that's usually the way that it works.
The ag report comes out tomorrow too, the WASDE.
Does it?
Yeah. Just scroll right back up.
Oh yeah, right there, WASDE. Yep, at noon. Oh, this is a big day tomorrow.
Yeah, so that's for all ag products, corn, wheat, soybeans. That's a monthly report.
Huge day of volatility tomorrow.
It is to vegetables what the Fed announcement is to stocks and futures and all that.
It is indeed. All right, so I didn't do any of these long arrows, this one or this one over here, because I'm totally expecting it to pull back and get down here and fill these gaps right now. You see all this sideways action that I had right here, there, and over here. I'm going to wait until we actually trend again before we jump into anything. All right. So let's go here and look at our Bitcoin and see what's happening with that. Okay, so just yesterday I was saying I think we're out of the woods with these. I do think we're out of the woods with those, but this right here, if this is a shoulder, this is a head, this is a shoulder, so it's building the other shoulder. So the spot on the shoulder that it can get down to is like right about here before it starts to get into trouble. Right in this area right here. I want to draw a rectangle, but I'm not exactly sure how. Do I do it with this? No. This one? No. This one? Rectangle. Here it is. From right over here to right in here. If it's going to continue with this drawdown right here, then that's where it should find some support and start moving back up. Okay, right in there. Now, this is a big move down right here. I don't know what it is actually down on the day, but well, I guess I can look over here. You'll see it right over here, won't it? Yeah, I know where it'll say it. You'll see it right on the website. Won't it? The home page. Right at the top, we have that streaming. There it is right here. Bitcoin down 3,002. Right there. So yeah, Bitcoin's taking a little bit of a bite. Now that's 3,002, 4.32%. Well, it is what it is. It'll go back up that in a day, easy, when it's ready. Look at it over here. Last time I had a move even bigger than that. It was right there. And it was from just about the same exact spot right here. Right, move down, followed by a bunch of little moves up. So that's what Bitcoin's looking like. I didn't look to see what Ethereum's like. Let's look at that. Okay, that's taking a little while up here too. But again, the same stuff. Okay, the head's the high is not quite as high over here as this one is over here. That's not a good thing. It's actually descending. But the support area is going to be in almost the same place. How did I get that thing? Was it in here? No. This thing right. Rectangle. The support areas. See, I had that circled in here. Now, when I circled that back then, I circled it ahead of time. It looks like I circled it, after the fact, but I didn't. I actually circled it ahead of time. So this is what we look at if it continues down right here, Ethereum.
Bitcoin, there was a lot of leveraged long positions, and those stops got hit, and then there's the domino effect. So,
do you remember when they first started getting up into the 60,000s? The first time when they were getting up there, and then Coinbase allowed people to borrow on their Bitcoin.
Yep.
Do you remember that?
Yep.
And then Bitcoin dropped down to 20,000, and all those people had to bail out.
Yep.
All of their Bitcoin was sold to cover their losses.
Yep.
Or cover their. I don't know if they're still doing that kind of thing, but I heard, that's the kind of thing that causes like a short run. But in this case, it was the opposite. It was a long run. Yeah, when you're borrowing against it.
We like futures because of the leverage they provide, but something like Bitcoin, be very careful. I think, and I think I say the same for gold or silver. Hold the underlying asset as opposed to, we have tremendous leverage with the ES. For $750, you can control $250,000 S&P 500 best of breed stock. That's huge leverage, but we're not risking the whole 750. Well, we are because we've put it out there, but as you can see, Michael's running a 10-tick stop, so that's $100 per contract. Or no, 125. Yeah, 125.
Yeah, with an 8-tick, like we used to do, for those other 10 years.
Yeah.
It was 100. That's why you're getting stuck on that 100. I get it. All right, so on the YM, we're just about back up to the ribbon right here. We didn't get down. We didn't fill the gap yet. We did fill the gap on the ES. You see that? Fill that gap on the ES. We're on the way down to fill the gap on the NQ. We're on the way down to fill the gap on the Russell. And the YM is also on the way down. So the only one that's given a trade setup on the way down so far, or the only one that's likely to give a trade setup, the YM was about to, the NQ is about to. The ES didn't, the Russell hasn't. So, what I was saying earlier, when you get gaps on futures, it usually fills them pretty quick. They don't usually hang around. Like with equities, you could have a gap for a week. You could have gaps that never get filled with equities. But with futures, they usually fill those gaps up pretty quick. You see 2 out of 4 of these indices right here filled it. We're going to have a black arrow right there on the NQ. As that one approaches, it's gap fill right now. So this morning, Mark, he's not in here, I don't think, but he was asking this morning about the black arrows and which black arrows are better arrows to take and whatnot. And a lot of it has to do with how deep the pullback is, how far you are away from the swing low, how far you are away from the ribbon. If it's like in this case right here, what I was showing this morning in the lesson plan this morning, I'll do a little bit of it right here in the lesson plan this morning. I was saying a good pullback would be right up here at the BBC right here, right there. 50% pullback right there would be great. Now, if it pulls back that far, you may get another black arrow. I mean, you could have shorted this black arrow right here down to the swing low. You had a little bit of room right there to get down there, and that's fine. It should go through that. It should make it down deep, but I'd rather wait. It's a trend change here. You see, we had bullish here, and we've gone to bearish here. I'd rather wait till it pulls back and actually bounces off of something to give us that push down that we're looking for here. Okay, that's what I'm thinking. And so right now on the YM, we want this to pull back up and test the ribbon. We want this to pull back away here on the NQ and test the ribbon. And the outer band's completely flat here. So pulling back's not going to do anything for us on the Russell. It's not going to do anything for us on the ES. The only 2 markets that a pullback would be useful for right now would be the YM and the NQ. Okay, both of these markets need to go down further to spread out the outer bands. Yes, that's what they need to do. So we're in the overbought now. So we're going to have another black arrow if we pop out of the overbought here. We still haven't hit the ribbon though. Okay. Does everybody understand that? You got to hit that ribbon. And we haven't done that yet. I'll look over here at this. $648,415 in the room so far. Quitting when you get the goal for the day so far, 238,485. You started with 13 contracts, and 49,500 if you started with one. So we stand right now in the middle of the year, almost the middle of the year. Almost the end of the month will be the middle of the year. 2420 blueprint at work. All right, on the YM, we wanted to pull back up and test the ribbon. It hasn't quite done it. Same thing over here on the NQ. These two, we want to see them go down more. We want to see them drop down further than they have. Okay, we're going to put another black arrow here if we get a down close and it pulls it out of the overbought. This will be a much more attractive black arrow than the last couple. It's pulled back again. It's not a black arrow. It didn't come out of the overbought, so it's not a black arrow. It's pulled back pretty deep here. All right, we're almost there now. We're almost at the ribbon. And we are over here on the YM. We are at the ribbon, but we've already filled the gap on the YM. We've already filled it on the ES and the YM. We haven't filled it on the NQ. We haven't filled it on the Russell. So the YM could give another short right here. It could just turn around and continue moving up. It's going to be 645 down to 37 right now. Now it's going to be down to 38, I believe. 46 down, no, 45 down to 37. All right, over here on the NQ, you're in the ribbon right now. This is what I was waiting for. 1875 down to 1475. Now 19 and a quarter down to 15 and a quarter. So we're looking for a down close over here. On the NQ, we're looking for a down close over here on the YM. All right, there's a down close on the NQ. I'm short the NQ. Here it is. And there's a down close on the YM, and I'm short the YM. All right. Now we need 8 ticks in profit to bump the stop on the NQ, so it's got to get down to 13 and a quarter, and we need 4 ticks in profit on the YM. I'm gonna put them right next to each other. Okay, so I can monitor both of them at the same time. This has got to get down here to 13 and a quarter, and the other one's got to get down to 33. Make sure my stops are in the right place. This one is not. This one is not. So I got slippage on both of those. Just a little bit, but slippage nonetheless. Okay, so this has got to get down to 13 and a quarter. And let's hit a little consolidation right here. If it goes up above the swing high of this blue candle, then that will be trouble on the NQ. Same thing on the YM. If it gets up above the swing high of that last pivot right there, that's going to be trouble on both of them, and it is trouble on both of them. So we stopped out of the YM, and now we're waiting on the NQ to see if it's going to push. The YM did already hit, it already did fill the gap. The NQ hasn't filled the gap yet. So there's still hope for the NQ on the downside here. See the ES, the Russell doesn't fill the gap either, and it doesn't have a trade set up. The ES doesn't have a trade set up yet. It's in a no trade zone. But it did hit the gap. I mean, it did fill the gap. Right, the NQ could still run down here. You just gotta wait it out. I've accepted the risk. 5 points risk is what I accepted on this trade. And so usually 5 points is enough. And when it's not enough, like that, when it's not enough, it stops me out.
And that's the truth about trading.
It is indeed. And the Russell right now is at the ribbon. It's at the ribbon right here. And just looking over here to see. Cancel. All right. Well, that's it. That's all I got right now. What time is it? Oh, it's 13:31. It's time to turn it over anyway. I didn't realize that. All right. So we stopped out on both of those, and it happens. We did make a nice trade here on the ES, though. So the nice trade on the ES took care of the 2 stop outs over here and most of the stop out there. All right. We ended up out of this whole thing with all the trades that we had. We ended up with minus $50 a contract. That ES trade was that good. All right. Well, that is going to be it for me. Now, if you have not taken a free trial with us and you want to, I know I just stopped out a bunch of times, but it doesn't really matter. At the end, what counts is this right here. Consistently being profitable. We've now, I didn't realize it until I looked today. We've now gone over a year since our last red day. I'm knocking on wood. Since our last red day. It was May 9th of last year. That's what you want to be, consistently profitable again and again and again. All right, so to take the free trial, you go here to mytradingiq.com. Click on the purple button right here. There is no credit card required for the trial. Click on that. It's going to bring you to this registration page. And right here, just fill this out. All we ask for is your name, your email, your phone number, and down here at the bottom, if you have NinjaTrader, just put in your machine ID. If you have TradingView, give us your login ID. Okay, hit register, and you'll be sent everything that you need to get going in the morning, and we'll enable the indicators for you. All right, again, mytradingiq.com, click on the purple button, start that trial. All right, with that, Dwayne, I can pass it back out to you in fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
Okie doke. Recap of the morning session.
Today it took, it took 22 minutes and 6 trades to get to $2,700.
Good job.
Thank you. Thank you. All right.
All right. We'll pick up where we left off, guys. We find it is we were on the NQ. As we were going through the recap of the CTAs, it was at 10 minutes into the life of this candle last night that the targets were published. Came down to the BBC, pullback holds more often than not. Made an attempt to run at the long target, but we stalled out at this high right here from yesterday. Right there. Stalled out. That sent us below the BBC down to the zone. We spiked the zone and hit the target. When the market finds support, it will go look for resistance. Pull back to the BBC holds more often than not. So that sent us back down through the zone and through the target. And this low was just above this low from yesterday. So support will send the market looking for resistance. This support sent us through the BBC all the way up to the long target, which was yesterday's high. Spiked it a little bit, and that resistance sent us back to support at the BBC, and then we made another run and hit the long target again. Crude, this is where we hit the highest weekly zone for the week yesterday on a Monday. Literally unheard of, but once the zones are published for the week, they're carved in stone. So there's no recalculating, no matter how high we trade, if what we expect based on almost 15 years of history is that by close of business on Friday, the price will be at or below the highest zone. If it's not, that won't change a thing. We'll just keep doing what we've been doing for 15 years. This is one market out of a bunch of markets out of, call it 14 years times 52 weeks in a year. That's a whole lot of weekly zones. Right now we're just consolidating at this zone, and the step line starting to hook right. When the black step line crosses from the left side to the right side of blue and climbing, that's an indication that price is going to attempt to pull back to the BBC. So, low of the day, high of the day. We did take out yesterday's high, closing candle at the end of the day. So we found resistance at the zone, we found resistance at the zone, and this all through here was just pretty messy. We never really pulled away from the BBC, so there's just nothing much to do there. Okay, gold. Gold pretty flat. Now we had that huge sell-off on Friday. Yesterday was a quiet sideways day. Today's pretty quiet. We opened last night. We got below the BBC. We hit the short target. The short target was based off the previous bullish cross. See? When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And it was. So we consolidated there for a while. Red and falling turned to blue and climbing. We got above the BBC, and we hit the long target. Found resistance at the zone. That sent us back to the BBC. Blue and climbing has now turned to red and falling. So there's nothing here that gets me excited about a trade, honestly. We're in a transition after that big move down Friday. We're transitioning, and I think by the end of the week we'll see a significant up move, perhaps back up to Friday's high. Friday's high was 2406.7. Silver. Here's where we opened last night. Couldn't get past the zone resistance. And silver, you only need 2 pennies to get your goal for the day. So price gets below the BBC, blue and climbing turns to red and falling, and down we go. And we hit the target based off this low from yesterday. Then we bounce. When we find support, bounce, and then we come back down to attack it again, and we trade through. So you'd have to go way back left to find that previous support. Support sends a market looking for resistance. BBC, we spiked it. We had a candle open and close, but it closed red. Now we find ourselves back below the BBC. Nothing excites me here either, except if price were to get down here. I think there's a logic alert in the channel that if price gets down into this area, then we're short down to the zone. I think that's what the alert says. And the euro opened right at the zone, consolidated at the zone. Remember, that's what happens 70% of the time. 20% of the time rejection, 10% of the time the slice. So this resistance at the zone sent us to the support at the zone. So we consolidated along the zone, popped up to the BBC. Pull back holes more often than not, but got blue and climbing here. So this may be the time that price actually trades through BBC. As you can see, the pullback holes more often than not. Eventually, it will trade through. And on the daily, looks pretty much like it did when we began the broadcast on the ES. Came all the way down to blue and climbing, found support. That's what we would expect. And now we've traveled back up to resistance at the step line. How we close today will be important. If we just stay flat like this and sideways, it wouldn't be a surprise because of all the big news tomorrow. Remember, 8:30 a.m. Eastern, CPI be flat. 2 p.m. East, 10:30, crude inventories. If you trade crude, I would put the mouse down for a half hour. And then, because remember, crude's already hit the highest weekly zone. So those inventory numbers tomorrow are uber important, super important. Could send the market significantly lower or higher, but we'll find out tomorrow at 10:30. Then tomorrow at 2 p.m. we have the Fed interest rate announcement. Then at 2:30 we have the press conference and the Q&A session. So lots of moves tomorrow, lots of news tomorrow, which equals lots of moves and some very high volatility. And we don't teach trading the news. Okay, everything we do is technical analysis. News is a fundamental thing. So in those times when we know there's going to be extremely high volatility, we just put the mouse down, watch the action, wait for the market to resume its normal rhythm, get back in the water. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. They buy books, they buy courses, videos, all kinds of things, and there's nothing wrong with books or videos at all. But they're not a replacement for a living, breathing teacher. 2 hours every trading day when you become a member or take the trial. You also get one-on-one mentoring, no extra charge. The strategy you learn and the indicators you own as a passport holder are fluid across all markets and all time frames. Price flows the same across all markets and time frames. From support to resistance, back to support, back to resistance, over and over. Again and again, it's a never-ending cycle. Also, as a member, you get the Logic 247 alerts, the concierge trade alerts, the weekly trading zones. You're able to attend the members-only workshop on Thursday night. You get the golden key that opens the private channels in Telegram. Everything a trader needs, all under one roof, one low price. mytradingiq.com. Okay, let's wrap it up with a good word for the day. We're going to talk about when you feel drained. Psalm 23:2 says, "He makes me to lie down in green pastures." Life can still be draining even when you're living right and doing all the right things. We have all received mail addressed simply to the occupant. Sometimes you're drained, not because you did anything wrong, but because you happen to occupy the planet. The combination of the world, the flesh, and the devil will suck the spiritual vitality right out of you if you let them. You try to pray, but no words come. You know you ought to read your Bible, but when you try to, the letters on the page, they just all run together and None of it makes sense. And you don't want to listen to spiritual people, especially when you suspect they may be faking their positive viewpoints. You're just going through the spiritual motions, nodding and saying amen, yet in your soul, you're running on empty. David, who had been a shepherd, said that God makes us lie down. Why? Because just like sheep, we would keep on wandering all over the place and wearing ourselves out. Note two things that David says. Number one, he makes me to lie down in green pastures. The word green means fresh. Each day you need a fresh encounter with God through prayer and a fresh intake of His Word. Bread is not the only thing that can go stale. Your spiritual life can too. And the second thing David said, He leads me beside the still waters. The word still means you need times of quietness and reflection. In Psalm 46:10, be still and know that I am God. The only way to know God intimately, sense His leading, and draw on His strength is to be still. And if you know anything about sheep or care to learn about sheep, why does the shepherd why does he lead them beside the still waters? Because flowing water, the sheep won't drink. Google it. It's a true story. I was amazed when I found that out. It's all connected. There's a reason for everything. That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.